South Korea continues to maintain vigilance amid the broader economic implications of the unrest in the Middle East. We have more on Press Perspective today. Hello and welcome to Press Perspective for this Wednesday, March 25th here in Seoul. I'm Min Sun-hee. State-run QatarEnergy has invoked a contract clause that effectively ends its liquefied natural gas exports to some countries, including South Korea, for the foreseeable future. For more on the broader economic consequences of the situation in the Middle East on the South Korean economy, I have Steven Borowiec with Japanese weekly news magazine Nikkei Asia here in the studio. Steven, welcome back.
Thank you. Nice to be here.
I also have Professor Kim Yong-Jin at Sogang University live on the line. Professor Kim, as always, it's a pleasure to have you with us.
Good afternoon. A pleasure to be here.
Right, Stephen, we shall start here in the studio. So let's begin with the latest on the foreign exchange and stock markets here in South Korea. How is the local currency and the local bourse faring?
Looking at the two of them over the past few weeks, I learned a new bit of economic terminology, which is a kangaroo market, which is something that the price goes up and down in kind of unpredictable but somewhat steady pattern, in a way that a kangaroo jumping along would be. And so what that suggests to me is that at least at this point, the movements in these areas are being driven by mood, by sentiments more than they are by, hard or very substantial predictions of scarcity or in the case of the stock market, the likelihood of growth or the likelihood of solid returns on investment. So, I mean, at this point, we're just, and this just goes back to the news cycle on the Iran war has been really dizzying. It just seems like in Washington, one day we'll hear something from the U.S. leadership that's, we're considering winding this down. We're having good talks, but then the day after that, the Iranian side will deny that it happened, and the Iranian side will announce more ambitious attacks on infrastructure, and then Trump will threaten to take out some bit of vital infrastructure in Iran, and back and forth we go. And it's just a very uncertain situation, and as we've learned over the years, and is perhaps even more severe now, is that the Korean economy, the Korean bourse, the Korean currency are all, they tend not to fare very well in times of geopolitical uncertainty. They tend to just be vulnerable to the movements and the rhetoric that we see overseas. So when it comes to the stock market, in parsing the decline and the fluctuations in the stock market, it just warrants mentioning that before this Iran conflict broke out, the Kospi was at a very high point, perhaps an unprecedented high point. And that was I think a sign of confidence in some of the reform measures that the Lee Jae-myung administration had been carrying out. And it was a sign that Korea was becoming a more reliable place for investors, a safer place to put your money. Some companies were operating with greater transparency, and that's still the case. I mean, what happens in Iran is not affecting that. So I just think the initial decline that we've seen in the Kospi in recent weeks is not really a slight on the market's fundamentals. It's just a kind of, it's two things. It's a response to geopolitical uncertainty, and it's a kind of correction on maybe some optimism that got a little bit out of whack. The currency is a trickier question. I mean, I think it was on Monday that the won hit a 17-year low against the U.S. dollar, and that goes back to the last kind of major global financial crisis. I'm not knowledgeable enough to really predict what's going to happen with the won, but I would just raise some points that analysts have put forth that the question is the won going to be able to recover its value in the way that it has in the recovery periods that have followed previous dips, previous recessions, previous global financial crises, or has something more troubling happened in the economy here in that investors are going to consider South Korea to be a less promising place on a kind of long-term basis? Are investors going to see the South Korean currency as, having retained less of its value than it had before and being an even less reliable asset going forward. Only time will tell there.
Right. Well, in the meantime, the South Korean government, Professor Kim, for its part, appears to be actively addressing the fallout of the unrest in the Middle East, including what Steven pointed to as the kangaroo market, the new jargon that you learnt. What is your assessment, Professor Kim, of the efforts of the government thus far, and what more do you propose to ensure stability for South Korea?
Well, before I answer to your question, I'd like to add, just one small things, to Steven's. Korean market will recover. Don't worry. So,
He knows that better
as
than
you
I do.
mentioned, right? Yeah. So as you mentioned, Sonny, the Korean government has entered an emergency mode, right? As of late March, launching a comprehensive set of the preemptive measures to stabilize the economy and protect energy security against the worsening conflict in the Middle East. The government's response has been characterized by high speed and proactive intervention across financial and energy sectors. Korean government has activated a $68 billion US market stabilization fund to curb, volatility in the capital market and proposed a fastest in history supplementary budget to support the small and medium enterprises and low-income families. Korean government has, also introduced a petroleum price ceiling system for the first time since 1997 to limit retail, fuel price hike, and implemented a mandatory 5-day vehicle rotation system for public institutions and encourages citizens and citizen participation in energy saving. They also boosted, coal and nuclear power output to compensate for potential LNG shortages. These initiatives by Korean government are quite effective to deal with the current situation. And then to ensure long-term stability beyond this, immediate, this is kind of firefighting measures, right? I believe we need some more, including energy decoupling, diversification of fuel import and supply chain redundancy, and proactive regional diplomacy. First of all, Korean government need to quickly transit from current, heavy reliance on Strait Hormuz petroleum. Hormuz means 62% of petroleum imported through Strait Hormuz and 20% of LNG, and toward long-term renewable energy and green hydrogen project. Secondly, it need to diversify fuel import by exploring the resumption of naphtha and crude oil import from alternative regions like Russia or the Americas. Thirdly, it needs to establish strategic reserves for critical industrial input beyond oil. I think you will talk later, such as bromine, 97.5% from Israel, and helium, 64.7% imported from Qatar, which are vital for the semiconductor industry. Finally, Korea need to evolve from a traditional construction contract to strategic joint ventures in high-tech, defense, and biotechnology with the Gulf Cooperation Council countries like Saudi Arabia and the UAE. And also it need to make faster the FTA with these countries.
Right. Now, Steven, as Professor Kim mentioned, beyond the concerns of oil supplies that are rattling our markets, there are also fears about 3 other essential commodities. Could you tell us a bit about them?
Well, the 3 are helium, fertilizer, and pharmaceutical drugs. And of the 3, for reasons Professor Kim just laid out, helium is the one that's most concerning for South Korea because South Korea gets 64.7% of its helium imports from Qatar, and helium is very important in the production of semiconductors. And if you read any kind of economic assessment of South Korea, the importance of semiconductors is something that is always very front and center. This is a real source of growth. It's a very important export. So if South Korea's chip makers face a kind of hurdle to their own production, they're not able to fill orders, that would cause real problems for the nation's balance of payments and for employment and for all kinds of other things. And just beyond just South Korea's economic scenario, I mean, as we've learned the hard way in recent years, these chips are really what fuels the global economy to a great extent. They're used in so many different products. They're used in cars, they're used in electronics. And they really are the economic item of the day. And so it's the kind of thing that makes me wonder if cooler heads could prevail in the Iran conflict. Like if the parties involved just see how this conflict is causing widespread economic harm to all different parts of the world and to the region, to all kinds of regions in this very interconnected world we now live in. We no longer really live in a world where there can be a very localized conflict that doesn't really affect all that much what's happening in the rest of the world. But this one, particularly given that Iran controls the Strait of Hormuz, which is such a common pathway for energy exports. So this is it's just like so many things when we talk about this conflict, it always comes back to if this conflict is prolonged, then this could be very troubling. If the two sides could kind of more rationally assess the costs and benefits of what's going on here and decide to, in some kind of a face-saving or some kind of mutually agreeable way to draw down tensions, if Iran could agree perhaps quietly to let more ships pass through the Strait of Hormuz, if the Trump administration could agree that further attacks would be counterproductive. But there are many examples of like this all over the world. Helium in South Korea is just one. All over the world, we have countries that are waiting and kind of biting their fingernails as they see if they're going to run out of whatever current stores they have. I mean, I think at least in Taiwan, I'm not exactly sure about the Korean case, chip makers have said that they have enough helium in store to continue production for the time being. But as with so many other things with this conflict, in the coming weeks and months, we'll see just how serious this will get.
Right. And in the meantime, Professor Kim, could you tell us a bit more about the potential impact on South Korea in the case of shortages in helium, fertilizer, and pharmaceutical drugs?
Well, Stephen well explained, most of the things, right? So specifically, Korea is exceptionally vulnerable to a helium shortage. Like you mentioned, 64.7% of its supply is sourced from Qatar. Helium is replaceable for water cooling and photolithography in advanced chip making. While big companies like Samsung Electronics and SK Hynix maintain roughly 6 months of stock, smaller manufacturers are facing immediate shortage. High purity helium is also essential for cooling superconducting magnets in MRI machines in medical area. The prolonged shortage could lead a diagnostic blackout, as hospitals struggle to maintain equipment. The disruption is hitting the fertilizer chain, fertilizer, right, at its source, primarily through closure of the Strait Hormuz, through which 40% of Korea's urea and ammonia import typically pass. Although domestic output currently meet the local demand, the industry that depends on imported feedstock is facing rising raw material cost combined with a weakening won. Experts warn of a 6 to 12-month lag before this crisis hit retail shelves. Reduced fertilizer application during the current planting season will lead to lower yield and structurally a higher food inflation by late 2026. In the case of pharmaceutical drug, they are not yet at the manifest shock stage, but the pharmaceutical sector is seeing rising cost and delivery delays. Korea depends on Israel for 97.5% of its bromine import, which is critical for the etching process in memory chip production. Any disruption here would create a massive bottleneck for DRAM and NAND flash production.
Right, I see. And despite the presence of these rampant external risk factors, Stephen, the finance ministry here claims that the Korean economy remains on its road to recovery. What more can you share, and what are your takeaways?
Well, they would say that. As a journalist, I've got to just flag that, we need to assess the source of information and, what is and what is not an entirely impartial source of information. Just say, the government has an interest in getting people to think that everything's going to be good, and I believe that their intentions are good. I think the government in this country is always doing what they can to prop up the economy and to spread prosperity among the public. But the things that they flag, I could say a few things about. They talk about improving domestic demand, improving consumption, and strong exports led by semiconductors. Semiconductors we've already gone over. They have been a consistent bright spot in the South Korean economy for a number of years, and they continue to, seems like every time we get export data, it's very strong, and the lead line is something about how shipments of chips are driving this, and that's all well and good, but as we know, the geopolitical scenario worldwide does present some risks to this, and as I explained earlier, if the semiconductor sector takes a downturn, that would be a quite ominous development. Domestic demand is, a real long-term project for the Korean government, like to get, for what is a relatively high-income country. This country has typically had, fairly low consumption as people have not gone out and spent in the ways that the government would hope, in a way that could make this country less dependent on exports and more able to sustain itself through domestic demand. And I would say there's just two big factors there. One is the price of housing and just how many Korean households orient their budgets in a way where so much of their income is going to either paying off a very big mortgage or saving so that they are able to get out of the rental market and to own their own home. So that means that they cut all kinds of discretionary spending. They eat out less, they buy less clothing, they take fewer trips, they don't renovate the places that they're in, they don't buy nicer cars, all the rest. And the other one is just the kind of weak social safety net for retirees. A lot of people, I think, as they get older, they don't have a sense of security that when they have to retire, most South Koreans have to retire when they're quite young in a country where the life expectancy is very high. You might have to leave your job when you're 60 and then expect that you'll live until you're 85. So that creates a whole long part of your life where you might have only a very small income, a very meager state pension, after getting a payout from your employer. So those are two very big structural things that I think the Korean government needs to address before they can expect a really long-term improvement in domestic demand. And those are things that are hard to address in the current climate when there are so many kind of more urgent challenges. But those are things that the Korean policymakers have been looking at for a very long time. So, and I know that there are very diligent civil servants who are looking into these things. So in the interest of everyone, we can hope to see some innovative policy measures there.
Right, for sure. Some daunting tasks that experts have previously also mentioned, of course. Professor Kim, staying with the local economy, President Lee Jae-myung, he has appointed Shin Hyun-song as the new head of the Bank of Korea, and this particular appointment rattled the stock market. Could you tell us why? And what are your thoughts with regard to Korea's monetary policy under this new BOK governor?
Well, yeah, like you mentioned, the nomination of Shin Hyun-song, current chief economist at the Bank for International Settlement, what is called BIS, right? As the next governor of the Bank of Korea by President Lee Jae-myung on March 22, has significantly unsettled the stock market. There was kind of amazing reaction from the market. This reaction stems from his reputation, I believe, as a pragmatic hawk, and his historical stance on financial stability over aggressive growth stimulus. Mr. Shin is globally renowned for predicting the 2008 financial crisis by warning against excessive, leverage. Market fear, I guess, right? His appointment signals an end to the interest rate cycle. with some analysts predicting a preemptive rate hike as early as the second half of 2026 to combat inflation driven by the Middle East crisis. In the case, the stock prices in the plunge, right? Mr. Shin has consistently argued that monetary policy should prioritize long-term stability and plumbing of the financial systems, liquidity, and leveraging of a short-term market vitality. He may also implement stricter micro-prudential regulations to curb household debt. Just like Stephen mentioned, this is one big critical part of Korean economy, right? Which dampen the real estate and retail sectors. Shin has expressed a negative view on one-pegged stable coins. I was kind of surprised anyway, arguing they could facilitate the capital flight in volatile market. This has specifically impacted the sentiment in the fintech area and digital asset sectors. With $1 exchange rate hovering around 1,500 won, Shin, is expected to use interest rate and microprudential tools more aggressively to defend the currency and anchor inflation expectations.
Right, I see. Well, I suppose we'll know more when he takes the helm of the Bank of Korea later next month. All right, Professor Kim, as always, thank you so much for your time and your thoughts today.
My pleasure.
And Steven here in the studio, thank you very much for your time and your thoughts as well.
Pleasure as always.
Right, that ends this edition of Press Perspective. As always, thank you for watching. Do join us again same time tomorrow.